Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So yesterday was a bit dramatic action on the gold. If you remember, we said recently that market could show the upward pullback on intraday charts as some pause was in interest rate action, and we said, well, maybe some retracement will happen, although overall context remains bearish, as we said in our fundamental research. Currently, guys, we are going to a new reality of the trading of the gold market. That stands in a very tight relation to the interest rates, even on intraday charts. And of course, it doesn't mean that you have to keep an eye closely on any whisper on interest rates and trying to catch any just fluctuations and trying to transform it into gold. This is of course not the case. So the one thing that you should do, especially if you're trading on intraday charts, just keep an eye on the important levels. Some natural support resistance zones, levels, so because the breakout moments are probably decisive for short-term trading. Fluctuations do not mean a lot for trading, but if market breaks the important level, that could make impact on the corresponding market. On interest rates, it happens a bit earlier, so it's a leading indicator to the gold currently. And I will show you a bit later, you will see how it has happened recently. On the daily chart currently, guys, well, nothing serious has happened yet. Market still stands inside this fluctuation range, keeping this consolidation. So, and major decisive point could happen only if the market will drop below the yearly pivot point. Particularly speaking, all eyes today will be on the non-farm payrolls release that should be released tomorrow, and particularly speaking on the hourly earnings. So keep an eye on hourly earnings. If you will see significantly better or higher than expected numbers, it means that inflation in the earnings, in the wages, have jumped. And that will support the dollar and will press on the gold. That could lead to collapse here into the rally on the interest rates, at least in the short term. So what we could do in the current circumstances. On the 4-hour frame chart, you can see market has shown the breakout of this consolidation. But currently we have another problem, that market has to protect this broken line. And it should not show upward return back inside of it. If market will return back in the consolidation, it means that it will go to the opposite border. This could be a significant rally. So for keep the breakout truth, market has to stay out of it. And here we have to keep an eye on the border of this consolidation. Until market stands below this border, it is possible to consider short positions on some pullbacks that market stands right now. And that will be our vital point for the bearish continuation. Conversely, if market will break through this area and return back in this consolidation, it would be better to stay aside from any short positions. Now let's go back to the trading process that we've got recently. I mean on yesterday's session that we discussed. Recall when we have started on recent position, we started at this point. And we said, as market interest rate stands at 112 resistance, it's possible some pullbacks. Market could start the upward bounce up from here. And here we've got some grabbers right at this point. So theoretically, here was a chance to take the long position. Actually, what I did right when the grabber had been formed. And indeed, you can see up a few hours, market has shown pretty nice action, more than for $10 per contract. So it was more than enough to place stop at the break even. But now, take the parallel view what has happened on interest rates. When this bounce has started on the interest rates, market was standing below 112, and recall what we said about 112 recently. Once market will break it, it will make impact on the gold and probably lead to the downside breakout. And once that has happened, the upward action on the gold immediately fizzled right here, and market starts dropping. After that, you could see what has happened. Once interest rates have shown the rally, gold market pricing collapse. And now take a look at the similar action. Interest rate stands in retracement. Gold market also stands in retracement. Technically, market has completed the XOP target, we understand right now is ready for a bounce up. Here's also some butterfly has been completed, but this market has exceeded the minimum target. So maximum target is 1618. It's a bit deeper downward action, was mostly gravitating to the XOP around 1860. So now what we're considering currently, we have two confidence levels on upper direction. First is 1830. It actually agrees with the natural support resistance line that actually protects the consolidation on the forward time chart, right? And we do not want to see the gold return right back up. And we have also confidence around 1840 area, slightly higher, which involves the major 30% resistance of the whole downward action, right? So two confidence could make to us pretty nice job. For instance, with the upward direction, as we do not want to see price returns back in this area, we could consider taking the short position near the bottom with the placing stop somewhere above the next confluence. So it's not really big stop, so less than $10 per contract, or approximately $10. But alternatively, if market will have enough power to break two side-by-side confluences and especially return back inside of this area, it will tell you that something is going on and market is stands in reversal in the short term. Particularly speaking, for instance, it might happen that market will start to form here the head and shoulders. But for that purpose, we need to see the reversal on interest rates. So currently, overall situation, fundamental background stands bearish, and we could consider taking the short position in this area. But if something will start to change on interest rates, and if interest rates will drop back below 112 again, that will be the signal that will tell you that probably gold also has some chance for deeper upward continuation. That's all that we have currently. Scalp traders, you theoretically could consider taking of the minor bullish position with this engulfing reaction on the XOP. This will be some kind of the ABCD pattern, so maybe you could consider taking the scalp short and scalp long position on the 15-minute chart. But since we are trading mostly on the higher time frames, so currently with understanding the bearish background, we could consider using this resistance range, big resistance cluster, and make an attempt to go short on gold, suggesting that supposedly that maybe reaction retracement here on the interest rates will not be too significant. Well, but actually, guys, be careful because the situation stands in general overall rather tricky here. Keep an eye on the interest rates, what will happen. And trying to use the clear patterns right near resistance, small stops to the break-even as soon as possible. That's the nearest some measures that you need to use to minimize the potential loss on the trades. So let's keep watching what will happen.